Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. 26th Thursday, the day before the day that matters. But hey, we've been getting some interesting things going on, even though the market is incredibly slow. I mean, this is really tends to be the slowest week of the year, and especially in the equities, it has just been awful. So let's come over to the charts. Good morning, Win. Let's do charts first. Where's my chart? Which chart is it? I've lost it. Here it is. Volume profile. Okay. So yes, you can see yesterday had a pretty good ramp into the close, but then they gave it up overnight. But you know, they're slightly bullish. But look at this. This is just such quiet trading, right? Now in the Treasury, yesterday we had a pretty good move overnight. Now in the overnight, there was a little bit of trying to buy, but like we've been getting that lately in the overnight. But you can see that it was very much subdued. Very much subdued. And I want to come back over here. When I look at the 6J, yeah, okay, so the 6J continues to go down, but there still seems to be a lot of correlation between the two of them. So that's going to be something that we want to continue to monitor. The oil, not too much of a movement yesterday, and a little bearish today, but not too big deal. Gold, lost the 1800 handle. Rates rising is bad for gold, right? So, there we go. Silver, kind of like in the middle of nowhere. Copper, well, it's down, but it's also very quiet. So just across markets, very calm markets. They all seem to be waiting for the FOMC, or not FOMC, but Jackson Hole tomorrow, right? In fact, Wynn's got it firmly trained on what signals the Federal Reserve might send at its annual Jackson Hole conference. Now, as for me, yesterday, if you recall, I had a trade and I got a pretty good runner on it. And so what I did was I just managed the trade. I closed one contract close to around when the NYSE closed, and then I held the other contract overnight. So I swung it, and I'm almost to 100. So I'm really shocked that I got a $100 trade on the micro treasury yield futures. I did not think it was going to work out that way. Now, that said, this might come back quite a bit today. I don't know. We'll see. So we do have news today. So let's go and make sure Financial Juice is on and look at what we've got ahead here. U.S. initial jobless claims expected 350K, and then U.S. GDP quarter over quarter, second quarter estimate 6.7. Then Fed's George will be speaking. You also get GDP deflator, PCE. I'm not going to read through all of those, but no, we export soybean exports. PCE prices preliminary. Okay, so a really good slate of news releases coming up here in 7 minutes. And hey, we're on time. I'm always supposed to start the stream at 6:20 my time, but I'm often late because it takes me too long to eat. But I have a casserole, a breakfast casserole I've been eating, and so it's really quick and easy. Did you have a chicken dinner last night to celebrate? No, I did not. Did you know that the reason that phrase became popular again was because in the original game that ended up being like a popular battle royale, which was PUBG, I believe is what it's called. That it says winner winner chicken dinner when you win the battle royale. but then Fortnite took over and it kind of died down. Okay, so the Treasury, there's been, in other days there's been a little bit more movement off of the open, but they're probably gonna sit here quite a bit because of the news that we've got in 5 minutes, right? So just browse around the internet here, see if there's anything interesting. Nassim Nicholas Taleb says to be anti-fragile, you must first have no left tail. Ah. Yes. Oh, he was commenting on Bitcoin. He was commenting on Bitcoin. And this Bitcoin article probably didn't know that Nassim has a negative view of cryptocurrencies. And what he's saying is that you can't have a situation, you can't have samples where you lose everything in your distribution histogram. Yeah, yeah, that's funny. Okay. Fundamental problem with psychologists is that they don't get p-values themselves are random variables. The problem is overt cheating, but other results don't replicate, and they keep going. Oh, yes. So I saw a study the other day, and they were trying to prove that support and resistance worked. And they were putting in p-values. And, I was looking at what they had there, and I'm like, it's not. First of all, your p-values aren't that significant. Like you have a p-value, that doesn't mean that it's going to result in profitable trading. But then the other thing is that they were showing support and resistance on like a 90-second time frame, which is like kind of dumb, right? Like that is not the way that support and resistance traders trade it. I thought it was a really interesting paper, but ultimately I don't think that it gave me anything too useful. But somebody did produce a paper that trying to support and resistance, so that was cool. Should try and do the search and see if I can find more. Taleb needs to post another video. I love his YouTube videos. If you're listening, Taleb, you could hire me. I'll help you make the videos so that we get better video and stuff. It'll be great. Chicken is a common allergen for ferrets. Really? I see. And then they put it in the food and it gets the ferret sick. So reading this, it was a claimed study. I haven't been able to read the study itself, but they were basically looking through, and their conclusion was that people are not allergic to gluten, but that when you put Roundup on it, that leads to the intolerances that they have. Kind of interesting. I don't know why I'm following this person. I should have my little, I want to get my little real-time news widget back over here. Jigsaw. And just hide it behind the Vista chart when I need it. Oh, that's not what I wanted. Not real-time news. Economic releases. Okay, so the GDP missed by a tenth. And the continuing claims and everything look okay. Continuing claims a little bit higher than expected, but initial claims, it's 353 versus 350, so not necessarily a huge deal. They are coming back a little bit. I realized they closed yesterday at like 20, so. Are all the stock developed allergies this year? He eats grain-free chicken diet, and I'm curious if that's what triggered it. Oh, that is interesting. Good morning, Kulud. Kind of monitoring this just because, like, maybe I want to do some management here, but I think we're okay. Fed's George says it's time to start easing off the policy juice. Kansas City Fed President Esther George told CNBC that the economy has reached the point where the central bank can start to pull back on the monetary juice it has been providing. Okay, so that could push things down if he's coming out hawkish. George sees good arguments for tapering faster than last time. Ooh, okay. By the way, you know what came yesterday? When I read it before, I was reading it digitally, but I got myself a hard copy. Look at that. It's a nice looking book, isn't it? I think it looks super nice. It's not one of those weird covers, you know, it's a really nice book. And it's nice to be able to look down on it. I think I'm gonna put like little tabs on it or something to point the best parts so I can get to those more quickly. Yeah, it's nice. You know, I don't get the book in a hard copy unless I really think it's a really good solid book, but and half of it is just so that you can see it, right? In the background. But that one I really want to go back over to that and read it, and I want to be to the point where all of the formulations in the book I can derive on my own from memory. This is, I think, one of my long-term goals. So the treasuries did move up a little bit, but I'm not actually seeing a lot of trading on it. Like, well, let's see here. How much did cumulative delta did increase? I can see cumulative delta increased by about 8K. Speaking of the book, what article were you talking about yesterday? So I talking about the Inelastic market one? Was I talking about an article by Beauchamp? By Beauchamp? It's the only study I can recall talking about yesterday. See how easily it comes back. It's because they're not trading even a quarter of the liquidity that's on there. They're moving down right now, I think, because of what Feds Bullard is saying on CNBC. He sounds very hawkish. The Elastic. Okay, let me show you this. So I don't think you were around when I talked about it. So I'm going to talk about it again. Oh, the E-mini is taking a hit. The E-mini is taking a massive hit here. I'll pull it up, but we'll hold up on reading it. Do you have trouble getting filled on the ZN when it's moving slow? Well, okay, so in this kind of market right here, the thing that is going to screw you up is that you're going to get filled and it's going to go through you. Did you see how on the move down, it's changed a little bit now. Now they're trading a little bit more liquidity at 16. But did you see how when they were trading down, it was only like 500 contracts at each level? So it's like you think that you're 3,000th in line, 2,000, 3,000 in line, right? And then all of a sudden you get a fill and only 500 contracts traded. That's the freaking worst, dude. That's the worst, because that'll go through you, you know? It's this adverse tick problem is like, if you get the fill, you're likely to be getting movement through you. So the way that a market maker deals with that is that they're just taking it at every price, and based on how much volume is coming in, they'll pull their orders, and they're basically averaging it out. And when you do the math, comes out to be they make the spread essentially. Like if you take they'll have like 100 trades, okay, and they have the amount of money that they've made, and they divide that by 100, and it will be equal to $15, you know, so they make $1,500 for that day. 1,500 times 100, right? Unfortunately, in Zane, you have to know and play around your Q position. Yeah, well, it's getting the fill and everything is kind of an art in itself, yeah. But that's why you want to watch for, so like right here is an interesting spot. You see how they were both 1,000? So for some reason, the market making robots weren't willing to hold much liquidity on either side. Well, it changed now, but okay. Now here at 15 seems to be his center price. So basically, they're not willing to hold a lot of liquidity at that area. So this area between 15 and 14.5 could become a little bit of a hole. Although in this particular situation, that might not matter because they're moving because of Bullard, so we could get like easily enough volume to pull it out of that. But if you can get a situation where the liquidity is not very high in that situation, and there's some sort of a mispricing based on what you see in the spreads or based on some correlation with the equity indexes or the dollar index, and that's a spot where you can potentially get that one tick, and that you have to have the volume going through too. And when you really get the volume going through, they leave so much inefficiency behind in those situations that you can get those one tickers multiple times quite effectively. Keller says I'm about 15 behind on the stream, so bear with me, but I have a specific question from yesterday's stream yes. So hold off on that one. So we want to talk about the inelastic market hypothesis. Yes, it's so great. Okay. Since this is going like things moved in my favor, and I don't feel like I necessarily want to do anything. So okay, so there was this paper by Xavier Gabiax and Ralph S.J. Koijin, colloquially known as GK, and their paper, In Search of the Origins of Financial Fluctuations, the Inelastic Markets Hypothesis. So, the general hypothesis that everybody's been kind of functioning on, or at least testing, is the efficient market hypothesis. And there's a big problem with the efficient market hypothesis because we can look at the fundamentals and we can see how much the fundamentals change, and then we can look at the S&P 500 index and how much it changes, and it changes way more than the fundamentals would suggest. So what is with that? And some people would say, well, maybe it's because there are fundamentals involved that we don't understand, right? But another theory that has a lot more support is that it's because of the orders. The order flows cause price aberrations and are the source of market volatility. Okay, so these guys, they decided to look at this, and the avenue that they decided to look at it was to look at the elasticity of the market, which is to say, when price rises, how much does that affect the supply or demand of the market, right? So if you come in here and you read their abstract, we develop a framework to theoretically and empirically analyze the fluctuations of the aggregate stock market. Households allocate capital to institutions which are fairly constrained, for example, operating with a mandate to maintain a fixed equity share or with moderate scope for variation in response to changing market conditions. Okay, so basically saying people put their money in index funds. As a result, the price elasticity of demand of the aggregate stock market is small, and flows in and out of the stock market have large impacts on prices. I read that again. The price elasticity of demand of the aggregate stock market is small, which means that as the value of the S&P 500 goes up, it doesn't affect the demand for stocks much, if at all, because people just continue to allocate money every month, right? And flows in and out of the stock market have large impacts on prices. Okay, and then this is the part that's like mind-blowing. Using the recent method of granular instrumental variables, we find that investing $1 in the stock market increases the market's aggregate value by $5. We develop a new measure of capital flows into the market consistent with our theory. We relate it to prices, macroeconomic variables, and survey expectations of returns. Right. So then Beauchamp, he comes in and he does an analysis of their theory and shows how what we know about market microstructure supports what they're saying about the prices are inelastic. And I think down in the conclusion is kind of where he has a couple of things that are really great. It is the idea that it is the order flow that must be predicted, even if uninformed, resonates well with the intuition of finance professionals and allows one to understand why statistical regularities might exist and be exploited by quant firms. Indeed, flow data is quite popular among statistical arbitrage funds. The order-driven paradigm also allows one to resolve some paradoxes, like, for example, that it is surprisingly easier to find predictive signals for large-cap stocks than for small-cap stocks, probably because the former are more actively traded and that the order flow reveals more statistical regularities. The 2007 quant crunch and other recurrent deleveraging spirals are also extreme consequences of the impact of order flow on prices. In conclusion, we hope that the present reformulation of the inelastic market hypothesis in terms of mechanistic and measurable microstructural effects will shed a complementary light on the origin of the financial market fluctuations and possibly hammer a final nail into the coffin of the efficient market hypothesis. Right? So like, what do we get from this? All of this stuff that people are trying to do, where they say, okay, the market moved up and then it moved down and then it moved back up, but when it moved back up, it moved back up a little bit more and it made a new high. Doesn't matter. Markets are inelastic. Why did it make a new higher high? Was it because the people that were trading on the second on the bull side were more informed than the ones that were trading on the short side? Is that why it was? Or was it a random effect caused by an institution rebalancing their fund and the market moved dependent on what the liquidity at the time was? Right? So it really when you start thinking about that and you just think prices are inelastic, all of a sudden so many things make sense in day trading for retail traders. It's like, oh, well, the reason that we got problems is because you're all using price. You all think that price is truth, but price doesn't actually tell you that much because price is just a derivative of the orders. The orders are the thing that actually moves it, that actually matter. And without being able to look at the orders themselves, you don't know how they came to that price, right? So the price doesn't have the informational content that you need. What you really want to do is you want to look at the order flows, and then you want to try and determine where those order flows are coming from to determine if it's from informed trading or not. Anyways, you should give those two papers a read. I think that they have huge implications. Like, retail traders just do not realize how much we are learning about the market in the modern era, because they're so stuck in trying to find a price pattern that they're ignoring all of the empirical research that's being done that explains so much about the way that markets behave. We're like in a golden age of market microstructure research. Informed traders, how is that determined? Well, so like right now, today would be in the E-mini. My mind is going to mush. The Treasury here, I think in the last few days, provides a very, very good example for us, Adam. So when I'm coming over here, yesterday at 6:30, we had some news come out. And they didn't really move all that much from it. Okay. But then they moved up. And it seemed like a really strong move up. Well, why did that move up happen? Well, I don't know. But what I do know is that it was very highly correlated to the Japanese yen spiking at that time. Okay. So I can possibly chalk this one up to uninformed trading, mechanical trading, right? But then it moved down, and it moved down really, really big. Well, is it a big deal that they moved down really, really big? Maybe. I think that the reason why they're selling it, or at least the reason that I sold it, is because people expect Powell to be hawkish on Friday. They expect there to be a taper. Not more hawkish than expected or anything, but just that there's going to be a taper and the interest rates are going to rise, right? Okay. So then let's come back over to here. We had a move up. What was the move up? Well, we just had news come out. The jobless claims was in line, and the GDP was 1/10 worse than expected. So is that a huge deal? Not really, but it moved up. And then we started moving down as Fed George was speaking, right? So what can I make from that? Well, this down move was from informed trading because of Fed's George, right? So that's kind of how I sort it out, or how you want to sort it out, is you want to look at a bunch of different instruments and say, okay, where is the money coming from? And when we look at those correlations and we combine that with what we know about the market news, we can say, okay, is that from informed trading? Why is that money coming in? And that's how do I want to position myself and play that based on what I know about it, right? That's kind of how I think about it. And that should play to future bias, I suppose. Yeah, I think so. I mean, my bias right now is my intention, full disclosure, my intention is to let this run through, maybe even through the weekend. That Friday, I think that rates will rise on Friday. We'll see, though. If they move too far, I might take it off just before he starts talking, because they already, I don't know, sell the news sort of event. I don't know. One of the things that I think is interesting about this, about the Treasury and this kind of a move, is like, okay, we're looking for a taper. Okay, so the market will try and price that in first, right? Well, yes, but the change in the order flow is still going to happen, right? So you could probably just hold it through, into November or whenever it is that they start tightening. Well, I don't think I would hold it for that long, but in November, the rates are still likely to rise, even if they're rising tomorrow, today and tomorrow. Because why? Because it's the orders that move the market. It's the orders that move the market. I see a piece of news and I don't see a whole lot of volume from it. Then what am I supposed to read about it? Maybe the market didn't really care because there wasn't actually orders from it. Okay, now let's go to what Keller is saying. I guess my question is multifaceted. I will grant you that clearly the politics of Corona is being dealt with in a state by state. But what are the implications of it being state-based rather than nationally based? Do mandates and stuff? If you agree that a national action would be unconstitutional because of the specific wording, then would you support a national mandate? And if so, what would your tactic then shift to? As a further general question, I generally don't know. It seems like states or maybe the national government or local government or something is always violating the 14th Amendment. Well, so the 14th Amendment comes up a lot, right? If so, should cops have, do you think, any other examples of violation of the 14th? Yeah, so, but there's where the kind of the thing that I was trying to get at is that a vaccine mandate depends very much on the details. So from a national level, kind of what they're saying on the national level thing, I think, is that the federal government does not have the authority to come in and say that everybody getting the vaccine is in the national interest. Is I think what the Supreme Court was trying to say in that decision. Basically, they're saying when there's an outbreak of a virus, that's a local issue. So only the local government would have the compelling government interest to, try and mandate vaccines, right? But then the other issue is that you cannot remove somebody's life, liberty, or property without due process of law, is where the 14th Amendment comes in. And when you get into the Supreme Court cases, that becomes a very broad, complicated, that's something that I'm sure in law school they spend multiple semesters on, right? But we can go into certain extreme examples, right? It's not against the 14th Amendment to arrest somebody for murder because they, to put them in jail for murder. You just have to go through the courts. You have to go through a process of law, right? Okay, so if the government was to come out and say, okay, we have a blood test and we did, we prick you out on the streets and then it shows that you're not vaccinated. So we're going to put you in a unvaccinated camp, okay? That would be a very clear violation of the 14th Amendment, right? You would be put into a vaccination camp. Your life and liberty were deprived, and you were not put in a court of law, right? Can they make it illegal to be unvaccinated? I don't think they can, but I'm not sure what the constitutional basis for that is, right? But on the extreme other side is forcing you to pay a $20 fine, depriving you of your life, liberty, or property. Well, no, it's not. I mean, as long as it's reasonable. If it's like this huge fine that makes it so onerous that it basically would be the same thing as putting you in jail, then it might not be upheld, right? So this is kind of the constraints that the government has to work in. That's why, for instance, Joe Biden is going about it all in kind of like this underhanded way instead, right? Like your school can mandate that you have a vaccine. How far their authority goes on that, I'm not so sure. There's court cases about that right now because, for instance, in Texas, is it Texas or Florida? There's a court case about this where the governor has a mandate against masks or vaccines. That they're basically saying that the schools cannot mandate that sort of a thing, and they're saying, well, we can, regardless of what the state governor says, and so that's going to have to go up to their state Supreme Court. I think that they're going to lose that one though. But then the even more interesting one is companies. Okay, so could a company require you to be vaccinated as a, requirement for employment? And so the Biden administration was basically begging corporations to do this. and Delta basically did. Well, they didn't say you can't work for them without being vaccinated, but they did say, we're going to charge you more health insurance. Well, as long as the amount that they're charging on the extra on the health insurance matches the cost that they incur from an individual not being vaccinated by COVID-19, I think that probably holds up. I'm not so sure that is a wise decision for that corporation, but I think that the courts would uphold it. The state fighting against school board mask mandate. I think that both of them are doing it, but there was one, I think it was Texas, where yesterday a local judge said that they couldn't do it. I think it was like a Dallas judge said that the state can't do that, and I was like, oh, okay, it's going to go up to the state Supreme Court, and then they're probably going to strike it down because Dallas is really liberal, so of course a Dallas judge would do that, right? See, that was one of the things I really hate about the law right now is you just go to a court where you have a favorable judge, and the judges aren't really. You would think that if their decisions are based on the law and the Constitution, that their decisions would be fairly consistent, but they're not. Like, you can go and find favorable courts to rule for anything you want, and they did that with Donald Trump over and over and over again. It was annoying AF. Yeah, remember the state wants to ban mandates not wearing masks. Yep. Well, and that's what we did here in Utah. I think that they're going to try. I'm sure that maybe there might be a spat between the federal government and Utah at some point. So I say it's really like the LDS Church has come out firmly in favor of you should get vaccinated and you should wear masks. But the legislature and everybody here is like, no, I'm not going to wear masks. I don't have to get vaccinated if I don't want to be. There you go. Dallas County judge has ruled against Texas Governor Abbott's move to ban mask mandates in the state, contending that such a policy violates the county's ability to reduce the spread of COVID. I don't know enough about the Texas Constitution to really know what should happen. I'm just guessing based on the state's ideological leanings that when that gets up to the state Supreme Court that it will be reversed. But let's see. I'm curious why the terrified keep themselves masked and vaccinated isn't enough for them. Why does the terror have to be mandated on everyone else? Well, it is an interesting thing, isn't it? So I remember we were seeing. Do you remember we were seeing some numbers where it was like the vaccine wasn't even like nearly half as effective as we thought it was? Well, I saw a little bit more information on that, and it turns out that was based on Israel, and they were making some assumptions about the vaccination rates because some areas are more vaccinated than others and all of that. And when they did the more complicated math and kind of sorted everything out, they turned out that the vaccine was still 80% effective. Now that's really interesting, isn't it? So but this is like Bayes' theorem, right? It's really crazy, but apparently the vaccine can be 80% effective, and it can still result in 50% of critical cases being in vaccinated individuals. So it's just like laws of large numbers. Even if the vaccine is really effective, thus you still get a large number of people that get sick. Right? So that's the first thing that I think is kind of interesting. But why force everybody else to be the same way? Because that's human nature, man. Human nature is we as a tribe make decisions like think about it like that, man. Like if you were sick or sorry, not if you were sick. If you were concerned about the coronavirus, you would have everybody in your household do, certain things. You would say you can't go out there without your mask because you could possibly get sick and then make everybody else in the family sick, right? Like think about it on a family level, right? But that's like what people's tendency is they want to enforce conformity in the tribe. And sickness is like exactly the kind of sort of situation in which that behavior evolved for. So humans have a compulsion to enforce their will upon others. There's a reason why when people get power, they tend to abuse it. It's human nature. That's why I think it is. But to the point that the disease is going to spread either way, well, the more people that they vaccinate, the less people you should see die from COVID-19. That's just the way it is. Yeah, some people are going to die, but the more that you can get vaccinated, theoretically, the less people are going to die. Okay. That doesn't mean that you can infringe upon their constitutional rights or make all of these societal level decisions that will hold forever and ever and will end up having extremely negative consequences at some future point when somebody decides to abuse them, right? There's so much conclusive evidence that everyone needs to participate in maximum vaccines for this to work the best. I would disagree on the masks thing. I have yet to see a study that shows that masks affect anything. I've only seen these kinds of I don't even know what kind of study you would call it, but that shows that the mask does block water droplets and stuff like that. That doesn't mean that it slows the spread. Unfortunately, that doesn't mean that when it's actually put into practice that it works. And it was funny. The CDC themselves, they did a study about this, and they said, okay, what things are shown to have an effect in schools, and requiring the students to wear masks had no detectable effect. So that doesn't mean that they don't help. It just means that we haven't proven that it does. $600 dead, it's nothing to you. How many more do you want to die from COVID? Well, I think that if everybody catches it and it has a death rate of 0.01% or something like that, then you can go and you can do the math on that. Listen, this idea that and every tiny little death from COVID is preventable is kind of crazy, right? Or you're talking about large scale numbers across the whole population. There's only so much that you can do, and some policies are going to have diminishing returns, right? Greg Greenwald had a video about this yesterday. I didn't have the opportunity to watch the whole thing, but he was making a very good point, which is how come nobody's doing a cost-benefit analysis on this sort of a thing, right? They're coming in and it's saying like, okay, we should do this and we should do this and we should do this, but it's like, okay, what are the costs and what are the benefits? How many years of life do you save versus how much money does the economy lose? And what are the effects on the kids and all of these sorts of things? And they don't want to do that. And I think it's absolutely insane. When somebody, this is something that I do not understand. And it happens so much in trading. I do not understand. It's like people don't want to do the analysis. It's like, how effective is your strategy actually? The signal that you think is a signal, what percentage of the time does that work out? And on average, how far in your favor does it go and how far against you does it go? You can represent all this looking at the history of the market and do an empirical study about that information. And it's like traders are afraid to do it. Are they afraid to do it because they know that they're afraid that it's going to say it doesn't work? Because I kind of feel like that's the case. Maybe it's because they just don't know how. But in the case of coronavirus policy, nobody's doing the cost-benefit analysis. And they certainly have the ability to do it. It's stupid to lose your life to COVID. Well, nobody here is going to lose their life to COVID, right? Statistically speaking, maybe one or half of my, one half of one of my viewers would die from COVID, right? I don't think that I have anybody that's actually 70. If you're 70, though, please be careful. But back to the point. The point was I haven't seen anything that shows that the masks, and particularly masks in school, do anything to slow the spread. Spread is slower in countries where populations are compliant wearing masks. Yes, but that would be behavior in general where those populations. I have not seen that. You'll find a study. Because I've seen a lot of studies where they've tried to do that, where they've tried to say this place they wear masks and this place they didn't. And what the difference between them are. And there's so many other variables they have to take into account that could affect the spread and everything, and how many people die, like how old your population is, how much, how widespread it was in your area anyways, right? So even this, like, why would the CDC be putting that study out unless, they basically, they looked at masks, but they didn't find anything statistically significant in that one. Let's see, I'd have to go, I can go and look again, but, well, America was already mask wearing, it didn't change anything. Well, so now, but this is where it gets interesting, I think, Caleb, is like, okay, so I'm not sure if the masks make a difference or not. I don't have any research in front of me to support that one, but vaccines definitely help. I mean, I don't think that we have to have any question about that vaccines against the disease are effective. And if we just assume that all of the numbers that we've got going through are correct and it's 80% and all of those sorts of things, okay. The problem is that for a vaccine that's 80% effective, that's still a lot of people that catch coronavirus and die from it. Like that's really the long run problem here. So this is why I think that like what Australia is doing, for instance, is like really insane, because they're like, we got to be COVID zero until like everybody is vaccinated. Well, okay, then what is going to happen is you'll get every person in Australia vaccinated, and then you'll open up and you'll still have a lot of people die. And at the end of all of that, everybody will be like, well, like, was it worth it? How many lives did you actually save by taking that drastic of a measure versus the impact that it had on everybody else's life? Like, don't get me wrong, somebody dying is an awful thing, okay? But like, you got to do the cost benefit analysis of it. Is it really the right thing to do to destroy the lives of 100 people so that one 70-year-old person can live an extra year? I have natural immunity. I caught it. I caught the virus and recovered, and I have natural immunity. Which, oh my gosh. So there was a story on Mother Jones that said, that called natural immunity a conspiracy theory, a dangerous conspiracy theory that you can have natural immunity. No, there have been at least 3 studies that I've read that shows that natural immunity is almost as good, if not better, than the vaccine. I don't know if I want to go off on that tangent, NASDAQ. AOS caught COVID-19 in May of last year. Oh my. I caught it in December. You're very naive in your knowledge of epidemiology. Well, I'm not really saying very much about I'm not basing any of what I'm saying on epidemiology. I'm just basing what I'm saying based off of what I know about statistics and the numbers that have come out from studies that we have. Right? I don't see what you're saying. Where was the thing that I said that was incorrect? The one thing that you could maybe dispute is that there has been a study that shows that the masks are more effective. It's the epidemiology. That's a poor argument. Show me the evidence itself. Listen, like, I get this whole thing that's like there's experts, and the experts tend to know what they're talking about. Yeah, that's very true. Okay, but when we're having a conversation about what are the statistics of COVID-19 and what is effective public policy, okay, you've got to post information. If you posted a link, Gecko, I probably didn't see it. You have to put like spaces around the periods, like remove the periods and put spaces instead, and then it will post the link. So it will make it look like you'll think that the link posted, but we can't see it. YouTube removes the links. Like, it just won't show those messages to everybody else. They need to make it easier to rewind. How is it hard? Okay. You can just click back in the thing and then watch it at 2 times. Yeah, you have to post the link. If you post me some links, we'll go and we'll look at it. Because I've seen many times. Now, one of the things that's kind of hard is that like people might be like referring to the same study, and then I don't realize that they're referring to the same studies. But I've seen many times where they were trying to show that the masks had an appreciable effect, and they just, I don't think that they've been able to do it. I mean, theoretically speaking, they should, right? Okay, PNAS ARG. What the heck? What kind of a name for a website is that? Let's see if it pulls something up. Proceedings. It's okay. Section 22. Let's see. Hold on a second. Proceedings of the National Academies of Sciences. Okay. The name of the website makes sense. Okay. National Academy of Sciences. Yes. Okay. Okay, so what I'm seeing here is our review of, well, I'll read it, and this may not be saying what you think it is, though. Okay, our review of the literature offers evidence in favor of widespread mask use as a source control to reduce community transmission. Okay, non-medical masks use materials that obstruct particles of the necessary size. People are most infectious in the initial period post-infection, where it is common to have few or no symptoms. Non-medical masks have been effective in reducing transmission of respiratory viruses, and places, time periods where mask usage is required or widespread have shown substantially lower community transmission. Okay, so this bit up here, this is where I'm saying that, like, theoretically speaking, masks should reduce the spread. Theoretically speaking, but when they try and go in and actually show that like it has a statistical effect on them, we haven't necessarily seen that. But here they say places and time periods where mask usage is required or widespread have shown substantially lower community transmission. So let's go and see where they have that. I'm just trying to let's read it from the top down. I'm just scanning here. Direct evidence. If there is strong evidence, either a suitably powered randomized controlled trial or a suitably powered meta-analysis of randomized controlled trials or a systematic review of unbiased observational studies that finds compelling evidence, then that would be sufficient for evaluating the efficacy of public mask wearing, at least in the contexts studied. Therefore, we start this review looking at those type of, okay. Yep, you can't find controlled trials because of ethical reasons. Yeah, okay. Only one observational study has directly analyzed the impact of mask use in the community on COVID-19 transmission. The study looked at the reduction of secondary transmission of SARS-CoV-2 in Beijing households by face mask use. It found that face masks were 79% effective in preventing transmission if they were used by all household members prior to symptoms occurring. The study did not look at the relative risk of different types of masks. Okay, so do you see the problems with that though, right? Is like, okay, one, it's one study. Two, it's like in the home. Okay, so like spread in the home, I think is a very different thing than like spread in Walmart where thousands of people have walked through, right? That's where I kind of suspect that you get a diminishing return on it, right? It's like, yes, wearing the mask is going to like prevent 80-90% of the coronavirus particles being in the air, but 10% is all that you need. And whether it's, whether there's 100 particles in the air versus 1,000 particles in the air, you still get the same number of people sick. That's kind of what I suspect, but I, we don't actually know. So I'm still going to say that we have reason to believe that masks should work, but I don't think that we've proven that they actually do. Right? Now, maybe they have more in here. Let's look. In a systematic review sponsored by the World Health Organization, they looked at physical distancing, face masks, and eye protection to prevent person-to-person transmission. They found that face mask use could result in a large reduction in risk of infection. However, the review included only 3 studies of mask use outside of healthcare settings, all of which were of SARS, not of COVID-2, and which was incorrectly categorized, and one of which found that none of the households wearing masks had any infections, but was too underpowered to draw any conclusions. The remaining study found the use of masks was strongly protective, with a risk reduction of 70% for those that always wore a mask, but it did not look at the impacts of masks on transmission from the wearer. It is not known what degree of analysis of other coronaviruses can be applied to COVID-2. None of the studies looked at the relative risks of different types of masks. There has been one controlled trial of mask use for influenza control in the general community. The study looked at Australian households, was not done during a pandemic, and was done without any enforcement of compliance. It found that in an adjusted analysis of compliant subjects, masks as a group had a protective efficacy in excess of 80% against clinical influenza-like illness. However, the authors noted that they found compliance to be low, but compliance is affected by perception of risk. In a pandemic, we would expect compliance to improve, and compliant users' masks were highly effective at reducing transmission. Okay, so this kind of goes to a different issue. Are you willing to wear a mask the rest of your life? What are you saying, Battle? This studies one proves one thing. Well, but I think that the overwhelming thing that we come into here is that it's not very well studied. This is the sort of subject that I think it could take them decades to really sort out, right? Breakfast calls, only so many ways to fix mush before they catch on. You're okay, Ace. Don't worry, especially right now. Is there really that strong of a reason to trade anyways, especially in the e-minis, man? Just watch the kids. When after the non-farm jobs report, then there'd be more trading, then maybe there'd be more reason for you to be concerned about it. But anyways, to my question, are you willing, those of you that strongly believe that masks are effective, are you willing to wear the mask for the rest of your life? Because here they're saying, well, it helps battle influenza, right? It helps to reduce the transmission of all of these diseases. So can you make the argument that all people should always wear masks because it would reduce the transmission of many different viruses and would save lives? Because I think you can make that kind of an argument. But this is where I kind of feel like nobody does the cost-benefit analysis. For instance, what is the cost on the kids of wearing masks at school? Because there's some evidence that it harms their development, right? There could be some evidence, what are the long-term effects of wearing a mask all the time? What are the long-term effects of people not getting sick very often because their immune systems just aren't tested? There's this. I think there's this really complicated cost-benefit analysis that I'm not really seeing. And with the masks in particular, I kind of feel like, well, you get diminishing returns on it, right? If I was at risk, if you're a person that's at risk, then there's enough evidence that you would want to wear the mask. My son is now socially disabled because he can't recognize faces because of masks. Well, but that's what they're saying, Ace. It's not like that, but they're saying that kids need to be able to see their teacher and other students and how their faces react to understand social context and learn things about how people behave and stuff. And so, yes, they're saying that basically the kids grow up with to be less able to read people's emotions because they can't see their face. Yeah, you say you made that up, but that was what some I don't know what kind of experts they are, but there are some experts, I guess, that are contending that. When it comes to mask usage, here's another thing is in the school. That's also going to be another really important point, right? No, I don't. And I said, I don't even know if there is a study. I don't think that there is. I think that it's a hypothesis that people have. Actually, maybe it's not. I don't know. We could go and research. But there's another point is, are masks effective in schools? Because do you guys remember that whole thing before they shut down the schools where the whole argument that shutting down the schools doesn't have a difference anyways? You remember that whole thing? But then they ended up closing them anyways. There was a big argument, the New York Times was arguing about it, and they said the scientific evidence suggested, and I believe that the World Health Organization says that to not shut the schools down, right? I think though in that case that there's a lot of people that really want to believe that remote learning for everything would be just the bestest. And so I think that they wanted to kind of test that. But I think the results of that were very, very clear that it's not as good. Certainly not for kids. Anyways, why did we get on that? Oh, well, because we were talking about the effectiveness, or we're talking about the legality of mask mandates. Cost benefit analysis. What are the societal costs of it being a regular thing for companies to hire you or not hire you based on your vaccination status? What other kind of health things could they start doing that based off of, I don't think that my company has the right to demand that sort of a thing actually, I'm wondering if because of health information and things like that. Like, I don't think that a company can come in and say, you have to give us your health records before we'll hire you. Pretty sure that would be illegal because of HIPAA and everything. So maybe there is some avenues through which that would not be allowed or would be allowed. Okay, so now very interesting, by the way. We saw pretty strong selling after the Fed's Bullard talked about the taper. He downplayed the possibility that the Delta variant may cause a delay in tapering. We're getting more inflation than expected. And what else did he say? I don't know. But we have seen the treasuries since float back up to basically where they closed at yesterday. The E-mini took a little bit of a drop, and they're recovering a little bit of it, but they're kind of going sideways. That just looks like the post-meta order impact. But clearly something is coming into the treasury and pushing them up. I mean, I can see, particularly in the 10-year, I can see the orders moving it up. I don't see any kind of other piece of news since we've been talking about that suggests that we would move back like that. When tapering is over, the Fed should let maturing holdings run off, allowing the balance sheet to gradually diminish. Fed is coalescing around a plan for the taper. Quick end to taper allows optionality for rate hikes. If inflation moderates, it can be delayed. But I didn't see any other piece of news, and I certainly didn't hear any other piece of news that would have suggested that the markets would have moved. Well, here's the E-mini opening. So I'm not sure. This one is a particularly, like before we were saying, oh yeah, but the 6J is moving. This time it really seems isolated. This the most recent bull run in the treasuries really seems isolated. I suppose there was a slight move in the dollar. I don't think that really explains it. The slight move in the dollar, where did it come from? The 6J is moving, but I don't know. Maybe it is just coming from the 6J and they're having an increased impact. Like maybe there was a lot of selling because of Bullard, but then the 6J flow still came in and that pushed us a little bit further because of that. I'm not seeing like the order flow up here doesn't like look like panic or anything either. That's not a bad point, yeah. I don't know. I shouldn't have gotten so much into whether or not masks work or not, because I think it was kind of beside the point. The question is, okay, like they work, but the question is what kind of public policy can you have around it? Could just be an attempt to shake out some of the shorts since the majority are bearish. Well, so like the thing is like shaking people out definitely happens, but that's like, a 4-tick sort of a thing, like what can happen is a market maker, or not a market maker. Like what will happen is if I'm trying to fill an order of some sort, like I'm taking a position trade, I'll put some liquidity out there, but then if I really want to sell, then I might pull some of my sell orders and let them move up into me. I might make it easier for them to take out those sells, right, and set my things up so that those are more likely to pull. But for it to move like all the way from the low of the day after a fairly strong move all the way back up to the high of the day, No, and we did see, like, there was order flow in there, right? Like, after that move, we had a solid, 8 to 10,000 contracts traded. It was like 10,000 contracts up, 10,000 contracts down, and then 10,000 contracts and back up. So I would say there was a meta order that was long. We don't have any kind of correlations to give us an idea about where that meta order came from. But because the liquidity appears to be a little bit light in here and everything, it ended up being, it's moving across the whole range because of it. And we should be aware of that, right? So if we had a reason to believe that more orders short are coming in, then probably there at that 18 would have been a good sell. I was really thinking like I would like to sell, but I didn't really have a reason to expect more after Bullard is done speaking. So probably the most likely thing, well, and I suppose that maybe it's already happened, but probably the most likely thing is for it to come back in range between 16 and 13. Because like both of those meta orders are done, the liquidity will probably just cause it'll just kind of constrain it into the middle, right? Now the E-mini, I'm surprised that Ace is still taking trades off of that. I don't know. After what Fed's Bullard just said, so here's my thing. I think that the markets, injection of liquidity has a very strong impact on markets, as we have learned from the inelastic markets hypothesis. Orders move price a lot. And when the Federal Reserve is coming in and creating liquidity, and so that these banks can do all of this extra business and pump up the markets, right, that has a really big impact. So tapering would have a strong impact on the market, and probably there are a large number of assets, in particular large cap stocks, that I think are overvalued and that will really struggle when the Federal Reserve tapers its asset purchases. So I believe that the rates should increase and that the S&P 500 should come down. Now, the issue with that is that when those rates increase, then the market flips out. And then they start to say, oh, well, because they're flipping out, the Federal Reserve might hold back or whatever, right? Because that's what happened kind of during those taper tantrums, was that in the end, the yields didn't actually rise from it, right? But this time might be a little bit different because there's the concern about inflation and so forth, right? There's the concern about inflation. And so it seems to me like the Federal Reserve is kind of leaning towards, well, normally we would be really easy and cautious, but because we have to worry about inflation now, we really do need to make sure that we're not doing these asset purchases when they're not needed. And since the economy is doing so great, we really should stop doing them. I think that's what they're saying. That was my read from off of their comments. Well, that's my words, not theirs. It comes back faster than I can see it, right? Well, this is a really weird market in ES. Phil, there is some strange action in the markets these days. It's trader unfriendly and the range is constricted. Mean reversion traders would do well. Well, yeah, but this is the kind of this action that I keep talking about. Like, so you've got two things going on, right? One of them is kind of the thing that you're seeing, and then, well, let me just go into what it is. Okay, so one of the things that you're seeing is that people are just shorting the VIX. Like it is really turning into the Federal Reserve actions have a depressing effect on volatility. And so you tend to get like the market moves less, essentially. But it moves less, but it tends to bubble up, right? What I'm seeing today, I don't know if that's what I would call it. Is that what you would call it? Probably not, right? Then the other thing is like this is like the slowest time of the year. This is like literally, so the large institutions like the index funds, all of those guys, they aren't playing in this. They aren't really actually playing. This is, mostly noise. Retail traders stopping each other out. So yes, if you were a mean reversion trader, you would probably do well in this action, yes. But there's tails to it. There's tails to it for sure, right? So that's not a complete solution, unfortunately. I wish it was as simple as just, it's a range state, so just play the mean reversion strategy and we'll be good. Because it could change. It could change very easily, right? Like this could change and just turn into an absolute mind-bending down day very easily. Especially given the context, right? Because here you've got the depressing effects of the VIX essentially mean that if there is a breakout in volatility, you get a really big breakout in volatility, right? So you would want to be concerned about a downturn. And then the comments from the Fed president in the context of the meeting being tomorrow and everything strongly suggests that we could see an increase in rates that would be negative for the S&P 500. So I think that you do have an increased possibility of a strong downside volatility spike, downside move / volatility strike, right? That's one possibility, but then the other possibility that's probably more likely is that the S&P 500 just chops around and doesn't do anything. But this is where it's like, it's nice to be able to trade multiple instruments, right? Because if you're trading, I don't know if, I'm weary of saying this because I know that he's going to go and do it, but if Ace was trading the 10-year micro treasury yields, he probably would be doing okay. Well, I think he's doing okay, right? And right, he made a little bit on one, and then he got stopped out once or twice. That he's still trading says that he hasn't caught what he wanted, but the micro treasuries have been giving you better swings. Not a strong trend, though. What would help Ace the most is a strong trend, right? Movement is better than non-movement. Well, it's let's draw a picture of it, right? Let's draw a picture. Because it's never that simple, right? It's never that simple. I mean, I think in general you're right, but when you say that, I'm immediately thinking, well, yes, but there's also a problem with what you're saying, which is that, like, if we were to say here is movement, and here is P, how much money you make from the movement or how good it is for you, right? So when there's hardly any movement, then you don't do very well. And so there is kind of like this sort of a thing where it does well. But then I think it kind of trails off, and there's a certain point at which the volatility is so strong that it's very negative for you, right? And the problem that I have is that this like NQ sits like right here. You know what I mean? And there's also a correlation between movement and how much money you need to have in your account to realistically make money from it. And that's also has a linear, let's assume that it has a linear relationship, right? So one of the big things that I just don't like about the NASDAQ is that so many people try to, here's the thing. I've seen so many people trade the NASDAQ and blow out their accounts, right? Does that mean that if they turned around and traded the S&P 500 that they would have made money? No, it doesn't. It doesn't mean that. They would have lost money either way. It's just because the requirements in the NASDAQ are higher, they lost more money and they lost it quicker because they did it on the NASDAQ, right? But if you actually have an edge, then maybe it's a different calculation for you, right? Can you hear me when my foot is bouncing? Because I can see it, the volume coming through on the microphone, but I don't actually hear anything in my ears. It's kind of weird. A large explosion at Kabul's airport's Abbey Gate in Afghanistan. Oy. I have to take those a 1 point move. It seems like you're very much favoring longs, though, Ace. Yeah. Not that I have a larger opinion on whether we should be going long or short the E-mini. Just that, like, how you filter and which side you take seems to be a really critical component of your strategy, and in times past it's tended to be really obvious what it's going to do in that respect. But well, maybe I guess if I was looking at 5-minute candles we're blue, but I don't know. I'm a little surprised that you're confident in making that determination at the moment. What I like about NQ is when I lose faster on demo and I learn faster in 1 minute, NQ does more than what ES does in 2 days on there. Well, okay. But, okay, the fallacy that I see in that is, how do you know that the things that you're seeing on the NQ and you're learning are actually things? What if it was all just random? Because probably most of it is random. You did take some shorts, but it seems like you've taken more longs. They should call the NQ their rip your face. Well, I think that it seems to me like the exchange sizes instruments different ways so that there's a variety, so that different traders can get what they want. Because, like, honestly, they could come in and they could just resize the NQ, right? Like, they could just say, okay, you can only trade full points in the NQ now, right? And that would change the whole thing. Like they could turn NQ into a thick instrument if they wanted. But they don't, because certain people like it. I feel that the people that it's advantageous to are robots. Robots and people that are willing to put on a lot of contracts and average into stuff. It's most of the time random, but I can see that it's random and I don't trade it. Okay. If that's really the case, then good. That one was really good, huh? What I like about it is if I lose, I know why. Why would you think that you know more that you're losing? Know more about why you're losing on the NQ than, say, like ZN? Because that's the thing that I think is advantageous about the ZN, is that the ZN tends not to move unless it really has a reason to. And it's a lot easier to sort out why. And it gives you a lot of time to think about it and analyze it as it's happening. And if you're doing something that's wrong, it doesn't reward bad behavior very well. You know, like these ones that move, it's like you might have a bad habit of over trading, right? In NQ, it will reward you for that quite a lot, just because there's movement. So like, if we just say it's random, it's like a 50-50 chance that you can make something off of it, right? Whereas in the ZN, if you're taking off of a random entry, you're gonna lose like 80% of the time. What is the micro treasury symbol again? I think I have to ask. No. It's in Ninja Trader, it's 10YR. Like, I think you can quantify it. If you're trading the ZN and you have some edges, then you could hit like 45% of the time. And if you don't have an edge, you're going to lose like 80% of the time. Right? Whereas in the NASDAQ, I think that it would be like, if you have no edge, you will win 40% of the time, and if you have an edge, you'll win 47% of the time, given equal risk reward or something like that. You know, like the difference is bigger. 821 current month. Now I need to remember, when do we switch? Oh, you know what? I did not even think about this. Wait, is it the last? Okay. Oh, geez, I feel so dumb. Okay, so for the bigger contracts, we are into rollover. So what I'm going to do is I'm going to roll over. Liquidity is better over here. Okay. So maybe we will get a different idea of what's going on here now that we're watching the rolled over future. Man, how did I not realize that? I'm usually not very on the ball with the rollovers, but this time was particularly bad, huh? Yes, so there are just a few days where you cannot count on delta. Well, I mean, if you're looking at it from my perspective, you can never completely count on delta, right? But we get a much more clear picture here. Okay, so the cumulative delta that I'm getting on the more recent future, particularly in the 10-year, is considerably different. So much less movement. So now we need to come and look at the pace of the roll total. CME group. Kind of seems like they're still trading the old contract. Also, when I come over into a volume profile here, oh man, I don't have, did I change it? Options, market data, merge non-back adjusted. Okay. Refresh. No. Reload all historical data. Seems like there's a bit of a gap, that the more recent one is, okay, yeah, 133 even. The forward running contract is a lot lower. You have volume in both. It's definitely the case, but let's quantify that. Where is it? There it is, pace of the roll. So which month are you looking at to think the 10-year micro is the way to go? No, it's in the micros you want 08. The micros, they trade the current month until the end of the month. Actually, let's look that up too. Last business day of the month. So we can keep trading this. So we would trade this one until next Tuesday. And you're seeing, yeah, 1.359. Yes. Yes, look at the range. We've moved from 347 all the way up to 377 at one point. Now you only get $1 per tick, but is there a reason why robots would hit the limits more when there's a lack of participation? I don't know if I could prove that there is or isn't. Certainly some people have theories that when there's not as much movement, there's going to be more shenanigans. Could also be that when you don't have much movement, the very few people that actually are trying to do something have a lot more difficulty dealing with the liquidity and getting their fills, and so. But the way I would think of it is this. trading on an intraday basis is, generally speaking, a zero-sum game. In futures, for you to make money, that money comes from somebody else's account. Okay? But it's not actually a zero-sum game, because the majority of the action in futures is not trying to make some sort of predictive decision about which way the instrument is going to go. The majority of that action is hedging action, right? So they expect to lose money on some portion of their trades, right? So these guys coming in and hedging, they expect to lose a certain amount of money, and so that amount of money is divided amongst the locals, which includes you and the robots. So you are competing with the robots for that amount of money, okay? The more money that is coming in, the more room there is for you to grab a piece of that pie, right? Like, imagine if we were having a pizza party. We're all on the floor of the CME. We're having a pizza party. There's only one pizza. Do you think that you're going to get a slice? Probably not. You probably need to be really close to where the pizza comes in at, right? Versus if they had a huge pizza that's the size of the whole floor, then everybody's going to be able to get as much as they want, right? So the more money that you have coming into your market, the more opportunity in general there's going to be for you. So on a day like today, it's going to be more difficult to make money. Not impossible. Like, there is the movement there and everything, and especially if you're only looking for a small little move, then like it can work out, right? Okay, so now that I'm looking at this in the treasury a little bit more, and I'm sorting everything out from the different expiries and stuff, it seems that a lot of that oscillation that we've saw off of the moves, like going back up to the highs and everything else, is likely to be roll activity. Oh, I still haven't looked at the pace of the roll. Pace of the roll 10-year. Front is trading more. If I go here and select product 10YR, summary, they changed the tool. So I want, where's the graph? How much money did you make today, boss? Only 50% complete. Surely after tomorrow it'll be 100%, but here we go. Right, first notice date is the 31st, which is Tuesday, right? But it's like that third day, 3 days before, that's when it starts to be like a big deal. So why is that? I wrote down something about that. Why is that? My notes. Takes 3 days. Short decides what and when. Could this create selling into expiration? 2 days before first business day of the month, bit close determines price, oldest long selected. Oh yes, the oldest longs, that's a key point as well. Somebody that's been holding for longer is going to be more likely to want to roll and get out of it early. Only 3 to 5% delivers. Well, don't tell him how much money you made, Ace. Tell him how many points you made. I'd be really interested to know how many points you've made net. Like take your total profit divided by the number of contracts traded. It's not really the same, like, because it doesn't really tell you like how many contracts he was trading it with and stuff, right? Like Ace could have been doing all of these trades with 100 lot. Yes, is $50 a point. Like, take your total profit divided by your number of contracts traded divided by the tick size of the instrument. And then you would get what your average profit per contract was, or your average excursion per contract is, essentially. Because what I'm trying to sort out is we know that not all of those worked. So was it like he lost 2 ticks on this one, but then he made 2 ticks on this one, and then overall in net per contract he made 1 tick per Now I have to show you a honeymoon picture. So do you get what I'm the metric that I'm saying now? So okay, you can either do I'm gonna use text. Profit in ticks divided by total contracts traded, right, equals average profit in ticks per contracts traded, right? But since you might not know what that is, well, if you go into NinjaTrader, so the way that you would show this is you go into NinjaTrader, click New, Trade Performance, and then it should just show us the default day, and then it would tell you, okay, you took 3 trades, you made 1/3, but you made so much more on the one that won than the one that lost, yada, yada, yada. Actually, if we go back, that's not the, where is it? Should be 4. There we go. Cool. That's my performance for the week. But in NinjaTrader, you can go and you can say ticks. And then we can say your average trade. That's like what you make in average is 6 ticks for me. Right? Because what often ends up happening, there are some people out there that are mostly about their ego. Oh gosh, wait, where did my 30 YR, there it is. Okay. Some people that are more about ego, they'll kind of trade in a way that will like maximize the amount of money they're making, even though their strategy isn't very good, by trading in sim. And wait, my micro treasury just dropped? No, it went up. I'm in a swing trade long on the 10-year in 10 YR. If you give him the equation to take profit to points, he can work. No, because he won't tell me the total number of contracts that he traded, right? I would have to know total number of contracts traded to figure that out. So like there's some of these guys and they'll risk 16 ticks to make 4 ticks or something like that, right? And when you actually go through and do all of the math, even when they're supposedly making money, they're only making a tick per contract, right? Which is or you can, one of the things that I'll do when I'm trading on sim, sometimes you'll see, is I will trade multiple contracts and I'll average in and out of things, right? And when you get to the end of it, it looks like really impressive. But when you look at the number of contracts that it took for me to get that, you realize that it wasn't really very good at all. That I was making money from my market making and not from like my edge, you know? I forgot the ammo cans buried in the desert with a pistol on. Yeah, I don't think that you want to. I really don't like the focus that some people have on the amount. But I think that the thing that NASDAQ Trader is trying to figure out here is like, you've taken a bunch of trades. Like, what was the net effect of all of that? Like, did you take a bunch of those trades and you're mostly just break even now from it? That's what I think he wants to know. You guys. Oh, those were your ammo cans, actually. Look at the ES movement. How much can anyone make? Oh, I know, right? He wants to tease us. That's fine. That's fine. So here's why it's interesting to me. Ace showed me a broker statement before, right? Like the first day that he came in here, he showed me a broker statement. And I was pretty impressed with what he posted. I mean, it was like 1 month, so I don't know like how consistent he really actually is, or like if you took all of his trading over the last 4 years, what it would be. But he's done pretty well that 1 month that he showed me, right? But this market is a market that would be particularly tough for that kind of trading. So to see what the effect of it was, if Ace were to say to me, I'm break even right now, that would actually be like amazing to me. Like, you come through, he catches such these big winners and stuff sometimes, and then the 1 week of the year he took a lot of trades, but it was the 1 week of the year where wouldn't expect his strategy to do very well, and he still came out break even. That's really good. Or even if it was a profit, that'd be really good. But we should expect that his strategy did not do as well this week as it has like almost every other week of the year. Don't forget the truckloads of toilet paper. Remember when like burning a roll of toilet paper was like considered excess? Because toilet paper was such a coveted commodity. Okay, well, the dollar is dropping here and the S&P 500 is moving up. Treasuries are towards the lower end of their range, but not too dramatic. Could be worse. You could be long air futures like Steve. I haven't made a video. I need to make a new video for Steve about, because NFTs are so popular right now, right? Like, what was it? A rock went for $16 million or something. Probably a wash trade, but still. I wonder how much that fart NFT is going for right now. You think that they've been able to flip it yet? Reuters official tells Reuters U.S. service members among those injured in Afghanistan blast, according to initial information. Ouch. They seem a lot more responsive to the front month too. Did you see when they ticked down? These went up 3 ticks. It goes back. It's probably we'll go back at 3 ticks. You could probably maybe spread that. They're not 100% in line. Yes. I loved that part of it. But you know, the reason they put that in there is because on the Jungle Cruise Disney ride, they always have a lot of really bad puns. I thought The Rock did such a great job in that movie. I can't believe that I paid for it on Disney Plus, though. My sister's kids were over and we did it, but I hate that about Disney Plus. It makes me feel dirty that I paid for that movie. Details still scant. Dude, if a U.S. Marine dies from this, you have any idea how... Ugh. I don't know. Maybe the media will ignore it, but jeez. All I know is that on the jungle ride in Disneyland, I got to steer the boat one time when the captain had to shoot the crocodile. Really? Wouldn't pay for anything from Disney? I don't know, Caleb. The Bad Batch and, of course, The Mandalorian are pretty good. Like, that's the thing. I'm willing to pay for it just for that. Oh, actually, don't pay for it, though. Do I pay for it? I don't know. I think we share it with the ex. It could be our own. No, I think we have our own now, though. No, we have our own now. So that we could watch those movies. It's worth paying for. It really is. But that's what I hate so much about it. It's like they made their own streaming service and segmented everything, but then they actually made it like worth having. So now it's like, oh, I have to have 3 streaming services? Come on. The Bad Batch. Okay, so The Bad Batch is a Star Wars computer animated series similar to the Clone Wars that takes place after Order 66 was issued and shows the New Republic transforming into the Empire, except for that it is like way more high budget and better. And it has a storyline somewhat similar to The Mandalorian, at least in terms of its premise. And I think it's really good. I quite enjoy the show. If you haven't watched The Bad, and they just finished the season, the first season, I thought it was really good. I'm excited to see where it goes. Gonna see. I'm hoping that they join the rebellion and all this sort of stuff. Where's the NFT space headed? Every little NFT, well, they're selling one NFT for tens of thousands. I think it's all just a big scam. That probably triggers me more than anything. I see that and I'm like, oh gosh, guys, this is like so dumb. 8. Can you guys believe that it is only 10:18 Eastern time right now? Like, okay, remember we do have some auctions today, and we have a 7-year note auction at 11. Well, that's going to matter to the treasurers. I wonder if we're going to have a day like yesterday where the auction comes and then it trades down. Do you want me to trade ZN? Oh, well, so you've made some claims, and I don't recall what you did, but if you traded ZN for a month and then showed me your stats, I'd be super interested to see what they are. With the caveat that if you're trading it sim inside of NinjaTrader, the fills aren't very accurate. So you need to be catching more than just a single tick, I think. There's an Infinity Futures webinar. I think I maybe heard of them. Meh. I tell you what, it's sometimes I go to a webinar and I feel like the person presenting, even if they don't necessarily give me an edge or trade or anything like that, they just say so many good things, and it's like a really, like the thing I'm gonna post on Monday. I've been torn between whether I should split it up or not, but I think that I'm just gonna have it be one. It's gonna be like a big 2.5 hour video, okay? But Gary says so much good stuff in that interview that I did with him. It's really good. And I've seen when I first learned about Anthony Crudeli, it was from a webinar on Futures.io, and he gave some really good hints and advice in that webinar, right? But then I've seen so many other webinars that are just like, this is just nonsense. Majority of them, it's just nonsense. For 8-week and 7-year no auction, yes. I have free CQG demos every 10 days for art. Wait, really? You could be careful with that, because I was doing that for a long time, NASDAQ trader, and they literally banned my IP. They banned my IP. Like, I went and I created a completely different email, a new email host. There's no way that they should have been able to correlate them together. And I got all of the information and everything, but then when I would try and connect, it would kick me. Yeah. In fact, no, maybe I have heard of that person. That's another one. That's, oh man, on like Reddit, and there's a thread on Futures.io, but I think it's mostly Reddit. There's a thread very often. Oh, what are the best people to watch on YouTube? And I see a lot of new traders, so many new traders. I've come in, I'm trying to learn how to trade. I've watched this and this on YouTube. Like they're getting all of their information about how to start trading from YouTube. And like, I just, people don't understand the way that these platforms work. Basically almost guarantee that any of the information that the platform is going to recommend to you is going to be useless, right? Because YouTube does not choose which videos to send to you based on how much edge there are in them. They do so based on the amount of engagement, right? And there's a very high probability that if the content is very engaging, that it is not going to have a lot of use for you in trading, right? Because that sort of stuff, like, everybody's already going to have traded on and arbitraged out of the market, you know? And it's just like getting your, I mean, YouTube is great. We have a great community here. I really think that community is kind of where YouTube becomes really, really useful. I do try and share stuff with you guys that, although I'm not giving everything away, that I'm hoping that you should be able to take and use and turn around into your own edge and then come back and share. Okay. But Like the whole thing about like trying to develop your edge from information that you find on YouTube is just no, don't do that. No. If you want to understand eBay, do you mean volume profile? Okay, why ZN over ZB? So for you, NASDAQ trader, I think actually you should do ZB. Just based on the very little that I know about how your style of trading works, I'm going to bet that you would have more success on ZB. ZN will be harder for you to trade, right? ZN, you really have to watch the order flow in ZN. Like it's so affected by the order flow and the liquidity that you can take almost any technical analysis strategy and you will do better in ZB than in ZN. And you can take almost any kind of strategy based on order flow and you will do better in ZN than in ZB. I've tested that on so many different strategies and it always comes out that way. So the more difficult, the ZN is definitely the most difficult. Nothing wrong with that, but I haven't seen anybody, except for a few, trying to teach a quote-unquote edge. I don't think that that's true at all. Hold on. ECB's Villeroy is speaking, and I think that he might have said something there. Okay, Feds Kaplan is about to speak, but I think that something he just said triggered the S&P 500. Oh, they really did not like that. I choose CN because you get a better read on the order flow in CN. I think you guys have recommended Fat Cat to me before and I read it, but last time I will look, they didn't have a whole lot of stuff. Maybe I'll look again. No, so there's a couple of people that I think are very much more in the style of what I do, which is you just get on and you trade. So like myself, Matt, Brian Watts, Paradise to some extent too, right? They're not, none of us are making claims, right? So you understand it, like the people that make claims are probably trying to scam you, right? Anybody that comes in and says, all you got to do is buy my thing and it will have this clean edge and just do that. That person's trying to scam you, man. But there are a lot of other people on YouTube that are claiming to teach volume profile, or they claim to have a system of indicators that will bring you success in trading. And they absolutely, they wouldn't put it that way. They wouldn't say, I'm not giving you an edge, but that they basically are. They're making claims. Now, the guy that Caleb is talking about, he in particular makes very grandiose claims about his performance, and if he ever had to go to court over that sort of a thing, I think that it would turn out very poorly for him, because it would turn out that he is lying in his marketing. But one should try to find some instruments that suit one's personality. Yeah. I'm just saying, like the 10-year in particular is very different from every other future, man. It really is. It is really very different from every other future, and there's lots of interesting things that come along with that. But here are two things about it that I think make it a very interesting test for, like, you're testing an edge or you're testing yourself or whatever. Okay. One is that it doesn't always go up. It doesn't always go down. Whether it's going up or down on any one given day is it varies a lot. let's put it that way. It varies a lot. In the S&P 500, if you just have a tendency to want to prefer buying, especially in the last 10 years, you're probably going to make money, right? So there's a lot of people that they think that they have edge, but the reality is that the profits are all due to them preferring buys, right? Okay. So if you take that strategy and then you try and apply it to treasuries, it falls apart because the treasuries don't always go up, right? That's the first thing about it. The second thing about it is that it is more difficult to move the treasury. Like, of course, orders have a big impact, and you could have a move that has no informed trading behind it, and it could move it up to the highs or down to the lows. But the order flow is just so influential in there, and so every bit of testing that I have done shows that the treasury is extremely efficient, and that technical trading strategies are less likely to work on the 10-year treasury. So it is a tougher instrument to trade to some extent. Now, the split side of that is that there are, because it's like we were talking about with the prices are inelastic hypothesis, counterintuitively, larger stocks tend to have more predictive signals because they have more order flow that exhibit more regular statistical irregularities in their flows, right? And so it's the same case with the 10-year. There are certain things that it does that you can take advantage of, and there are certain things that just the treasury market does in general that you can take advantage of, and that are reliable. And I think for these micros in particular, now that we've got these micros, like look at it. I've taken 4 trades, but I'm doing pretty good on it. Not only do I have a profit, but I have a pretty good runner and setup and everything else like that, right? Like, it's just, there's certain things that you can know with the treasuries. The Federal Reserve is going to taper asset purchases. Yields are going to rise over the long term, right? And it's almost like the Federal Reserve tells you what it's going to do, what the 10-year treasury is going to do, and you just have to be patient enough to be in it long enough. So that's what makes the 10-year special. Man, I'm not quite sure what it was about what Vilroy said there. The ECB anticipates supply problems to be short-lived. The ECB will continue to support recovery efforts. Delta variant's consequences will have an indirect influence on the U.S. due to the impact on growth in Asia and the United States. Next month, we may raise our French growth forecasts. I'm not sure I'm seeing what the specific comment was he made that really freaked the market out. I'm looking at the treasury and the markets are open, but no one. So are you looking at the 10-year treasury right here? 132.29 half? Did just see it move up a few ticks, but they're trading it. Look at that. Another tick up. See, on 133? No, it's not. 132.29 half right now. Are you on December? I mean, you could do either or today, but I've moved over to December. Because there's actually delivery, it's a little different. Oh, you says you got in long. Just as it. Well, I mean, it was kind of moving up. I'd say that in days past we've had it range across this whole thing a couple of times. It has done that, but the action in the middle here has been a lot more messy. So that kind of suggests to me that after the initial move and stuff, that they didn't really see much of a reason to move, and they're just stuck there. Also, note here in the yields, I think that the yields overextended when it happened. Watching that webinar, I remember how much I miss having a DOM that isn't a POS. You gotta get the Jigsaw platform, I guess. Splice them into each other like I've got. If he decides he's correct about why the market moves, there's no one talking him out of it. It's hard. I mean, I try not to make a conclusion like that unless I have a really, really strong reason to believe that that's what happened. I mean, like, I'm positive, because I hearing it on the squawk and the way they moved, that the reason the S&P 500 moved down was because of something ECB's Villeroy said, but I don't know why it's... If Kaplan's saying he doesn't see anything changing in his outlook. Maybe Zero Hedge might have some. Americans told to leave immediately. Well, okay, so the headline on Zero Hedge is stocks slammed after Kabul blast. Blast at Kabul's airport has catalyzed some fear and sent VIX exploding higher, and that has sent some stocks tumbling. Gold also jumped on the reports. Gold is up. Gold still isn't to 1800 though, so I think that they're. I don't know if there's a lot of support for what Zero Hedge is saying here, but let's say that might be a change. Fox News is reporting a second explosion in Kabul near the airport. Okay, well, hold on. Okay, that might be it. That seems to make more sense. So we've got the report of the first explosion at the airport, but then around the time that we had the down move in the S&P 500, they were reporting a second explosion. Sky News is reporting the death toll at 13 and includes children. Ugh. At least 3 troops have been injured. U.S. State Department has issued a warning to Americans to not travel to the airport and avoid airport gates at this time. Oh my gosh. So basically this seriously complicates their efforts to get people out of there. ISIS is responsible. This is truly a nightmare scenario, says ABC's News Martha Reddit's. Yeah. Okay. I mean, I don't know if that really should have a really appreciable impact on stocks, but that sort of a thing does change people's sentiment, and it could have it could have a short-term impact. Unless the Taliban have a nuke, Biden won't change his stance. Yeah, I wouldn't expect Biden to do anything. I expect that What's Her Bucket will get out on the podium again today and tell us that everything is hunky-dory and that they're doing an awesome job. The U.S. casualty numbers are expected to increase. So Americans start dying from this, then it's really like... it's so bad for President Biden. I don't really know if it should really have a really truly significant impact on the markets other than short-term sentiment. But here, given the context again, the yields have increased quite a bit. So like the yields are kind of going in line with there's going to be a taper and everything, right? But over here in stocks, before all this, they were still kind of trading like there's no reason to trade, right? So if there's no reason to trade anyways because it's expected or anticipated to be a slow day, and then you have a terrorist event, then yeah, why wouldn't you just sell and get out? One of my early trading memories is making a load of money on the downing of an airliner. Oh yes, I remember you telling us about that. I remember that. I very much remember that. I prefer long distance OnlyFans relationships over ones with a physical person. Dude. So we have been able to get the baby into his own bed. Now sometimes we get into bed late, and so we don't do anything other than just kind of like snuggle and stuff. But I'm telling you, man, the just physical touch like changes you, man. Like it's good for you. I really don't know how to put it. It's just I wish I understood why it has that sort of an effect, but having some form of regular physical touch seems to have a big impact on your psyche. What do you think about OnlyFans U-turn? I was really surprised, but I think it verifies all of this stuff that people were saying that it was only happening because the banks were bullying them. I don't think that OnlyFans would have lost as much revenue as people think because most of their content is probably not actual hardcore porn. But I don't think we'll ever find out now because they turn around, right? That was smart, Seth. I guess that's why you calm all the time. No, the reason I'm calm all the time is because I'm on Adderall. The Adderall suppresses your emotions. 100%. Some people saying it was a publicity stunt? I suppose that's possible. I was a little disappointed that, when it was like they were kicking conservatives off of these platforms and stuff, and the banks were basically saying, we're not going to bank with you because you're conservative or whatever the deal is, right? And all of these people on Reddit were like, yeah, they should be ostracized from society because they're conservatives. But then all of a sudden, when it's their porn, then we can't allow companies to do this. How can they be allowed to have this much power? It was absolutely ridiculous. I couldn't believe it. I was like, yes, our freedoms And being oppressed by corporations only matters when it's our porn at stake. Good grief. No, RJ. What we're saying is they backed on that. They canceled. They canceled no fans. Okay, so the treasuries are rising a bit. I think because risk-off sentiment, but it's not nearly as much as the S&P 500 went. Kaplan is still speaking and could potentially say something that will push the treasuries down and make our yields come back up. I find it interesting, though, that the 10-year is in the middle of its range, but the yield is towards the bottom part of its range. Why can't for once we do something I want to do? I need to get a cute small. You know what you should get is you should get one of those hairless cats, a Sphinx cat. Feds Kaplan, I'd want to start tapering as soon as possible, but spread it out over plus or minus 8 months, but I'm open to other options. I'm worried about the unforeseen consequences of the Fed's bond purchases. This is bearish for treasuries, but they're not going to respond to it. The E-mini can't be doing this kind of crazy stuff and not everybody else being like looking at it and being like, okay. How much of a sell was it when they sold? So like 8K? Yeah, it's a reasonable drop. I started stocking only stalkers. It's much better. One time there was 11 of us. They're not cute though? Are you kidding me? Okay, wait. Okay, so like the thing is first of all, because they don't have any fur, you need to keep them warm. So you can put them in cute clothes, and they love the cute clothes, right? So that's the first. That's great. Okay, and they actually do kind of have an endearing. Now the thing is it to you right now it doesn't seem cute, but that's because you've never touched one. Okay. That its skin, it feels like velvet. It's like, like when your hair is just kind of like you'd shaved it and it's like 2 days old and it's just kind of soft and short, velvety fill on your head, right? That's what a Sphinx cat feels like, all right? But then these things, they do get cute, especially when they're kittens. They're cute AF. I mean, come on, look at that. Tell me that is not cute. That one looks like a tiger. Its face. They're adorable. And then the other thing is their personality. Okay, a Sphinx cat has a much stronger personality than your average cat. And they are actually, like a lot of cats are kind of like ambivalent almost. But Sphinx cats are like very loving. I just threw up in my mouth, which is where my dog would keep a cat like that. I really want one. When the dogs are gone, I want one of these. Ooh, you think that they have any? Let's go look. I haven't looked in a long time. $2,000. she's beautiful. Oh, actually, she is kind of cute. $1,000. A black Bambino Sphinx? What? You see that as like a midget wiener dog cat. Oh, that's ridiculous. Stud service. That's what I need, man. I need to get a Sphinx cat and let it be a stud. Oh, man. Okay, it makes so much money from that. Breeding Sphinx cats. $2,000 a pop. Can you imagine? That's like, you know, you have kittens. This is like $2,000. People are dying in Afghanistan and Seth wants to get a cat. Look, the awful things in the world are happening. Let me look at cats to comfort myself, okay? This thing in Kabul is going to be a big deal, isn't it? Like, I don't think when that headline came over that I really realized you have to get a kid to school. Okay, I'll see you later, Ace. I don't think the potential effects on it. I think I'm still in the mode of like, well, okay, but should it actually affect my trade? Nah, I don't think it's a big deal. Yada 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 yada. But from like a historical and society perspective, it's a big deal. It's a very big deal. Kabul will go down in history as a disaster for us. It makes me sick. It really does, yeah. It doesn't just make me sick. It makes me very upset. It's having a very dramatic impact on my worldview, I think. Because, you know, for a long time, I was kind of like, well, you know, I think that some of these people are right, that it would probably be better for us to not be as involved in foreign entanglements and that sort of a thing. But now I'm like, dude, these foreign policy guys, they were right, and we need to stop ignoring them. Well, I don't see anything else happening, but they are pushing a little bit lower in the S&P 500. It kind of looks like that the buy the dip guys are just kind of capitulating. I'm wondering now, from the perspective of like, do I really want to take a trade on like this whole thing falling apart, which was the beginning of the week, 23rd? Yeah, 23rd. So below 44.50 would be where it would get dramatic. Sex and Hammer says, expect legacy media to scramble to not report on or ask questions about the role of ISIS in the area. Oh man, because yeah, if ISIS in Afghanistan becomes a big force, then that is like a really big problem, isn't it? Now, on the 10-year, for me, do I want to try taking some risk on a bounce at some point? I think that I might, but not here. Oh, I don't know, that's kind of a difficult one, because I don't think that it would really make much sense for me to try and add on risk unless it came back quite a bit, like back to 33.30. for instance. But at that point, there's like so much excursion on that way, you kind of have to wonder if you actually want to be along at that point, right? So I think that we should just kind of watch it do its thing. I would expect or anticipate that, well, I don't know. Will the S&P 500 like buy the dip and recover off of it? I'm not so sure. I mean, I think that they would have every reason to do so, but they don't necessarily have to. And at some point, you get low enough that some certain options gamma flips on you and everything, and things could get ugly. So Took me over an hour to get $40 on Z. Wait, that wasn't an hour. It's been like 30 minutes. But you did go long. You were long at like 29, right? 29, yeah, so you made 2 ticks. There you go. But that's the thing. You have to have something that actually like really appreciably moves it. It's like really hard to just make money off of noise in the 10-year. Today's an interesting day to look at it though, because we got moves in both ways in the treasury, and I think that we were able to identify where that flow was potentially coming from. It will be curious if we get like a real volatility spike and the yields get crushed here, or if they find a floor, because right now the treasuries isn't saying anything to suggest that they're going to break to new highs. This is kind of like a good question mark area as to whether they continue from here. And then we see if they go for the highs, but they could come back on the other side. Oh, Schnabel is going to talk now too. Man, like every single Fed person is talking the day before the thing. Clearly the taper is coming, right? It's just a question of like what other flows that affect the treasury that might make the yields increasing difficult, right? Well, 10-year did come back down there though. I don't know. Did you actually get the exit in the fill NASDAQ trader, or are you still in it? He says yes. Okay. I think that means yes, I did get the fill. I can't tell you how many times I've been there trading the 10-year, and I would have like, I'd be long and I'd be looking for 4 ticks or whatever. It would go. So once I've got like 1 tick, I'm feeling pretty good, right? And then, there's 2. Oh, that's good. But then it fizzles out. It doesn't go to where I want, and I'm like, no. Now, I think now that I understand the flow a little bit better, I can kind of better tell when I need to take it off like that. But it's so frustrating. It's so frustrating trying to take the exit. It's just luck that you exited. Okay. In retrospect, though, when we look at the spot and how it behaved in that location, that kind of would have made sense to have made some to have taken some off there, right? So we don't necessarily know if there's going to be more flow. Like that was kind of a spot. It got quiet. Could have just taken it off. Depending on how high of a time frame you want to trade. Like if you're just scalping, like if you're truly scalping, then you would definitely want to take it off there. Weak setup, yeah. Well, I don't know. Do you notice that the treasuries come back 2 ticks, but that these didn't move? By the way, look at the volume profile. Like they're actually starting to trade a decent amount of volume in the 10-year. The 30-year, for some reason, there's like hardly anybody trading, which I find really weird, but I would have thought there'd be more interest in the 30 years, but I guess not. I need to, now that we're actually getting some data in the 10-year here, though, we could probably go and start doing some programming on it. Like we might have enough data to actually do something, because I want to come in here and look and see, like, these don't seem to be perfectly correlated. They seem to diverge at points. And so the question is, the rate and the price don't necessarily have to be 1-to-1 all the time. But when that does happen, what is the tendency? Does it revert or what? Like, should you take the trade there or not? That's something that we could probably test. I think I would need to think a little bit about what the correct way to look at that would be, though. I think I would need to go back to doing the calculation and saying what based on this one and adjusting for what should be the current interest rate and seeing the difference between the two of them. John Cardilla, Biden owns this. Yeah, well, you'd need more than a couple ticks divergence though. I don't know. Do you trade YM? No, I've never put an order in YM before. I like the thick instruments, so I do ES, I do the 10-year, and do these micros. Well, it's time for me to get going. How do we explosion in Kabul. Explosion in Kabul. Sounds explosion in Kabul moves markets. I'm just going to be that simple. But I don't want to be... This is just for historical sake. Like, how are we going to find this day? I want to be able to search explosion in Kabul and find it. But I don't want to have a sensational headline or anything about it. It's very awful. Probably when I get off stream and I start reading about it, like the true emotional impact of it is gonna like maybe hit me, but at the moment I'm kind of still being really what is the word, logical about it, you know. Okay, guys, tomorrow, holy crap, yes, tomorrow is going to be a big day. This just complicates things even further, doesn't it? It's going to be interesting, so don't miss it. See you then. In the meantime, stay profitable.